And that means we are now live here on our YouTube channel, Tackle Trading's Halftime Report. And markets are up for the first time in about 4 days after starting the week on a very bullish note. Happy Friday, everybody. As always, got a good show here for you planned today. We're going to break down the markets technically, take a look at these charts and kind of analyze them one step at a time. We've got Coach Frank here, as always, master technician himself. Frankie, how you doing today, sir?
Hey, doing well. Although I'm going to be honest, I'm going to get one of my earning complaints out of the way right now. Will earning season just get over? I know it's just getting underway, but I am already tired of it.
It's tough to scan, isn't it, during earnings season?
It's really annoying to be like, "Ooh, that's kind of interesting," and then say, but it doesn't matter. Yeah, as a directional trader, everyone here knows, unless you're brand new to the halftime report, you've heard me complain about this probably more than you care to have heard me complain about it, but I'll keep doing it. I just not a fan of earnings season.
It does make it a lot trickier when you're swing trading, position trading, you're trying to plan things in advance, but also it does also remind us that that's why protective put options are so valuable as well. When you're going into those earnings reports, Frank, with a core holding, you can play a put option on that and kind of protect as well, right?
Absolutely.
Yep.
And I think we could all agree that earnings can be twice a year, and we'd all be okay with that.
I don't know a single trader who wouldn't agree to that, except maybe Vega traders, obviously, the ones who like to play those earnings reports, but that's not a big portion of trading out there. But yeah, I would. Two earnings reports a year would be right up my alley, Cody. No doubt about it.
Absolutely.
By the way, we also got Cody running the screen here today. Cody, you're going to be driving the bus as we go through analysis. How you doing, young man?
Doing quite well. I'm going to draw a nice little smiley face for everyone. There we go.
That's not bad. I'll get. That's okay. I was wondering where we were going to go with that, but that looks all right.
I don't have the nice little fancy drawing tools that Noah has. Maybe I should get one, and I can draw unstraight trend lines.
Dude, don't worry. Just trade happy. It's good right there. And then Marky on the back end as well, doing analysis. How are you, sir?
I am not too shabby, right? I'm going to miss the markets the next couple days, but it's been a long week. It's been a great cash flow week. I got no complaints at all.
Yeah, the back and forth action when you have, up and down and back and forth, generally, I mean, we haven't made that much price change this week across the broad indexes, Mark. That does fit into your theta trading, the style you trade.
As a bullish cash flow trader, to have basically Mnuchin acknowledge that the stimulus deal wasn't going to happen and still be basically even on the week, that is a huge win. So, chalk this one up in the win column for bullish cash flow traders.
Yep. And as you guys are coming in, filtering in here, welcome out #Team Tackle in the chat. As always, I love seeing that when you guys come in and bring some energy into that chat, staying positive, staying focused on the markets, all that kind of stuff. And as questions come up, comments come up, we'll keep an eye on those and make sure that we address them as we go. Give the channel a subscribe and a like if you've not done so yet. We appreciate everybody out there in our community. And let's get into the analysis. On today's show, retail sales, consumer sentiment, some economic data that does not surprise me at all, but we'll take a look at it. Some more information around Brexit potentially, which, kind of just, it really hurts my heart, Frank, whenever I have to talk Brexit, but I think we will bring it up shortly here today. But really technical analysis. We got some charts, we got some company news, and we got some upgrade and downgrades. Let's start with the broad market. Frankie, what are you seeing in this thing technically? Breakout on Monday, carrying through that 3,400 level. Actually, on the S&P broke out last week, carried through on Monday, I should say. Little 3-day pullback into this candle here. What are you reading on the S&P?
Yeah, I think you like the way it played out. I mean, we always want it to just go straight up, right? But we're also realists, and we know that's not what the market does, even though sometimes it feels that way, right? So a nice orderly pullback into, an old, known support zone, into that moving average. I was hoping to see one more inside candle today, but that's not how it's going to play out. Although on the other side of it, we still have some time, but I'm assuming that not a whole lot's going to change between now and the end of the day. I think we could call this our confirmation candle going into next week. So it really did us a solid. We now know where support is in the form of yesterday's low. We've had a retracement. I mean, I caught some of the halftime report where you guys were talking about it yesterday, and that was, those 3 bars were about as textbook as you get, right? So it's been very orderly and well behaved. As long as we hold that low from yesterday, and we close somewhat close to where we are today, I think we can say that this is a confirmation candle going into next week.
Marky, how are you seeing the technical analysis on the broad markets here?
Well, yeah, no, and from a technical standpoint, Matt's analysis yesterday, Frank's analysis today, from a pure technicians, they see this as a confirmation. The technicals are very actually clear, and Matt and Tyler and Frank over the last few weeks have been spot on, like dead spot on. And those pure technicians have really had a good time. Support levels have held, breakouts have produced nice little things, have a retracement now. So from a technical standpoint, it's all good. I just worry about the sentiment, right? I mean, that's what I've been on for a few weeks. Like, what is the umph? What is the juice? What gets people excited to smash the buy button again? That is the one criteria lacking that gets me from like being like excited about being directional more than cash flow. Is just the what's the umph, what's the juice, what gets people excited. Now technical analysis can just lift that up, and those pure technicians like Frank, they don't have to worry about such nonsense. They just say charts. But reading that sentiment thing, what's the juice that sends it higher? Earnings around the corner, that could be it.
Yeah. Well, and there's obviously hesitation in front of the election a little bit, but the charts are the charts, right? I mean, and what you said there, pure technicians, they've had a good time of it here recently after the breakout. This is a really nice pullback developing. Can you just ignore
you think
the
about
backdrop?
think about the last 3 weeks from a textbook bounce off the rising 50. So those individuals that say, I'm going to play off the lows, I'm going to play off a rising moving average, that was the 100, excuse me. Textbook bounce off the 100. And what is this is the problem with non-color coordinated moving averages.
These are the proper colors, okay? So this is the 9 is yellow, the 50 is blue, 20 is red, 100 is pink, 200's green. And by the way, this line that I just drew, this is the election day.
I've never more wanted to be colorblind in my life than right now.
All right,
just have them all the same color. Yeah.
Here, there we go.
There you go. No moving averages. What do you like more, Mark? Moving averages with the wrong color or just a clean chart?
No, I'll figure out the moving averages, because moving averages play a huge role in technical analysis for me. I mean, because we see the bounces, between that and horizontal support and resistance. I mean, this has been a nice market. I mean, you think about that. What is it now? 3.5 weeks, a clean bounce off. The 100 is that the freaking 100? What is that red line there?
This one?
No, the bottom where it bounced off of.
That's the 100.
Yeah, the 100. So bounce off the 100, came up, you established support levels, right? At 3,200, then 3,300, then had an explosive break in momentum, then caught the 9 yesterday. I mean, this has been a beautifully technically oriented market. Like, 5, 10, 15, 17 straight days of just pure great bullish signals. I mean, that's a good little stretch. And so from a technical perspective, people that just adhere to technical analysis, and that's the kind of the decision you have to make as a trader, is what are you going to do? What is going to be your methodology? How are you going to make decisions? It's been a good stretch, and technical analysis is amazing. And unless you have a great feel or like an obsessive know-it-all like myself, you probably would be behooved to go 90, 95, 100% technical analysis as your decision-making process.
Well, and on that front then, Mark, I mean, you had 3 red candles into the 9 EMA, and now you've got a little upward movement here today. Don't you got to be interested if you were just a pure technician alone in what you're seeing here?
From a pure technical point of view, of course. But once again, I'm a stodgy, old know-it-all who is very, very cautious, right? I'm really, really risk averse. I want everything lining up for me. Or else I'll just do boring cash flow strategies.
You do know with no commissions, Mark, you could just buy 2 shares to say you did it and to play the technicals and see where that takes you. If 2 work out, maybe you can up to 3. There's nothing wrong with that.
No, and as these technical formations have formed, I've been adding bullish delta. Now it's on the theta side of it.
Sure.
But I mean, this has been a nice run. This has been a really nice run the last 17 days.
You know, and as I'm watching the technicals across the market, by the way, the S&P is still holding a green candle, but there's some indexes that are threatening to not do that. Give me the NASDAQ if you can. Frankie, on Monday, the biggest run was that NASDAQ, and obviously up. It was up over 4% at one point on Monday's trading. Nice three candles back into this. It was even up today about 1% at one point just after the cash open. Now we're giving up some of those gains. Are you seeing anything in here that gets you more excited, more concerned? What's your read on tech?
I think it's pretty close to the S&P, to be quite honest with you. I'm not really seeing a whole heck of a lot of difference in this particular swing. I mean, yeah, it's been one of the strongest places. It seems like maybe some of the other areas have caught up, as opposed to, I don't really think the NASDAQ has worked down. I think things have caught up personally. I don't really think there's a lot of difference. I think these two indexes are really, really close right now. If you prefer one versus the other, I don't really have a preference. And I probably honestly not going to for another couple of weeks till we get behind most of these earnings. If you made me choose, I'd probably go with the S&P, but I wouldn't fight hard. I think they're very, very similar to one another. A little bit of a battle going on the intraday right now as it's trying to, is this a little intraday pullback, or is it something more than that? So that'll be an interesting one to watch maybe for the day traders.
Yeah, for sure. And actually, day traders have had a nice volatility today. The first hour of trading, I should say, pretty much was pretty bullish. It's given most of that back. Now it's fighting at support here. So we keep an eye on that as we go. Back on the daily, if you can, there, Cody. And let's take a look at the other two indexes. And Cody, give me a quick technical read on the RUT and the Dow.
So the Dow, I would say, is pretty much in line with what Frank was saying. That I agree that it hasn't necessarily been falling behind as much as it's been kind of playing catch up. And then you can really see that on the Russell, which has definitely been playing catch up the past month, where it was kind of down in the dirt. And as the rotation that's happened in tech, took its breather for a while, we saw a lot of these smaller cap companies and move upward through the rotation. And now I actually really do like the setup here on the RUT, where you can see, oh, that's not a line, that's a circle. Where you can see
not a line, that's a circle.
It's a very thin circle. You can see very nice where it actually had that breakout, and I actually don't like breakouts as much as I like the breakout retracement. Everybody knows that, but I also don't like it when it runs this strongly up to the breakout point and then breaks out. But I do like what I'm seeing now that we had that breakout. It's 3-day pullback actually in a red candle yesterday. So if you were to look at the RUT, it looks like it's, that support is holding that previous resistance, now current support. And if this were to continue, I can see it moving up to its highs to play catch up with the rest of the market. So definitely liking what I'm seeing on the RUT based on that rotation that we're seeing, and a little bit more diversification, things that are happening throughout the markets. People, aren't just smashing the buy button for tech anymore. They're looking at other companies that they could possibly get into.
Yeah. Right. And, Cody, on the RUT, I mean, other than this, 1650 that's kind of sitting right, that weekly candle, if you will, there's really nothing until 17. I mean, that's about as much empty space as you're going to find on a chart. So certainly could see where we're coming from on that side.
Absolutely.
And that weekly highlights that beautiful breakout last week, and then the daily on the little pullback, developing. I like it as well there, Cody. I think it's an easy read on the technicals. We'll see if it ends up playing itself out in that regard. Let's keep talking markets. By the way, you mentioned that we're not just smashing the buy button in tech. That is actually true and happening here today. You're getting a little bit of different rotation out of some of the sectors. Give me XLY if you can. And a couple of different items on this one I want to talk about. Number one, it is kind of up there near the highs, one of the strongest rated sectors, Frank. It's been a really, really good performer. And I think we had one of the highest rankings on this one at the 25-yard marker. I saw that some data, Mark, and you don't ever bet against the American consumer. That is one thing that we've all learned over time. Retail sales were up. Okay. They were up 1.9% in September. They topped over their projections. We saw some data out of that. Consumer sentiment rose as well. It came in at 81.2 compared to the 80.5. Do you boys still like discretionary in some of these retail type stocks that are in here?
If there's stimulus.
Mm-hmm.
I mean, because we learned in 2020 that if the government creates a multi-trillion-dollar stimulus package and they give it to the consumer in the middle of a pandemic, they will still spend money. That is what we we learned in 2020. So if the government keeps giving money, then consumers will keep spending it. Now, one of the problems we have with the savings and income ratio right now is that the most recent report, income dropped, which not surprising. The government wasn't handing out stimulus checks, but the savings rate also dropped even bigger. Unsustainable thing. So there's still some savings in America, but like unless the income portion of it, which right now would either be one of two things, actually people getting back to work, which isn't happening, layoffs are continuing, or government giving those fat checks, there could be some crosswinds in the months ahead on discretionary type stocks.
Mm-hmm. Well, there's a couple of thoughts I have on that. Number one, I'm not sure I'd bet against it, even if there's no stimulus. I mean, we're talking about this month, Mark. They didn't have stimulus in September, and retail sales still went up.
Yeah, because they're spending their savings. I mean, it's math. I mean, the nice thing about math is it's math, and so the savings rate continued to go down. So Americans love to spend money, right? They love to spend money, and if they have money, they'll spend it. So eventually, you are going to have to pay the piper here with either a stronger economy creating jobs or more stimulus coming in.
Math is math unless it's fuzzy math, like old ex-President Bush used to say.
Or dropping math.
Yeah, that's right. Frankie, what are you seeing here in discretionary? I still like it. I'm looking for a potential breakout.
Yeah, I think you remain bullish on it, and it's fine. You always have to pick stuff, right? As you can't trade it all. So I have no objection if you want to be if you like something better, I think that's fair. But yeah, I think overall you look pretty strong. Home Depot within this space is looking very nice to my eyes going into next week. I thought it was going to try to ruin my setup, but looks like with a little bit of profit taking, I'll have a clean breakout candidate for Monday morning. So still interested. You're still seeing a lot of strength, but I do think, I think Mark nails it. You kind of, for me, you go with the strength. You're not trying to play catch up in this space. I think if you're trying to play the catch up game, there's other areas, small caps, utilities, so on, so on and so forth. So for me, I'm still there, but I think this sector overall needs a little bit of development technically.
You brought up the industrials were also looking pretty good as well. I think XLI, XLY and some of the consumer names, XLI, I actually like the development here, Frank, as well. Nice little breakout today. In fact, we're seeing strength in some of these names here in the heat map. It grabbed my attention. Do you like this one?
Industrials has been awesome. Absolutely. It has been. And
Wall Street loves industrials right now, like in tracking sentiment and tracking. Wall Street loves industrials right now. Mm-hmm. They're just, at least for this week. And I mean, they want it to be the new tech in the short term in that 1, 2, 3 month period. So I wouldn't be surprised to see industrials outperform the rest of the year.
I wouldn't be shocked either. And maybe not going so far to the rest of the year, because I usually don't think that far ahead. But much like the rut, I mean, there's just not a lot on XLI, until 85. I mean, that was a major, getting back above that 80 was a big deal on XLI, right? That's just so much history at that point. Your UPS has just been, and FedEx has been insane. CAT, John Deere, some of the, railroads have been very strong. Defense has been a little bit lagging, but if I'm trying to play catch up, maybe that's where I'm looking. If I'm trying to play some catch up, because it has been very strong.
You mentioned that. Did you tweet that one out, Frank?
XLI?
No, CAT.
Oh, no, I don't think
because of earnings.
Yeah,
and they also caught an upgrade here today. We'll go through some downgrades later, but CAT actually caught an upgrade from, I believe, Bank of America, was it? Wells Fargo. Wells Fargo.
The Wall Street is trying to jack up industrials right now.
Mm-hmm. So. When was the last one y'all mentioned? Deere? DE?
DE's been just a juggernaut. So many of these FedEx, so many of these stocks have just been absolutely performing just so strong. And I think there is still opportunity within the space. I expect a couple of those picks on the reports over the weekend. And one thing I love doing, I mean, if you're a veteran of Team Tackle, you know that we do our scouting report meetings with all of our internal coaches on Fridays. It's one of my favorite things we do all week long. No question about it. Getting together with the boys and the girls and talking markets, And I think that at XLI, the conversation will be a around an upgrade, most likely. We're looking at that potentially breaking that 80 like you're talking about, Frank. Looking good here on a Friday afternoon. If you're looking something outside of the areas you've already been trading a lot, there's still opportunity out there in the markets, I think.
Oh, yeah.
Yeah. Let's keep working through the broad markets, and we'll get some other news here. Give me crude oil, Frank. I'm going to throw down the gauntlet. I've done this all week long with every coach who's attended our halftime report. Noah failed. Tyler failed. Matt couldn't do it either. Find something in that chart that you can make me interested in.
All right, my job is to get you to buy off of CL, right? Or sell. Do I have either way?
And anything. Yeah.
All right, so let's get crazy. So we all know how sideways we've been, right? We're knocking on the door of some resistance. We have double bottomed. We've got a little bit of we've got a higher low. Haven't broken through that resistance yet. So one feather in the cap of crude oil, I would say, is a double bottom, little cup and handle type of development on the break potential. So there's that I think everybody's probably made the same case for. It's also, if you go to a weekly, Cody, please, you'll also notice that it's not too far removed from the 50 weekly moving average, which is certainly nice to, would be a nice bonus, right? A nice little bonus if we were able to get it. So if we were able to break through resistance, let's just say that that's the way it plays out. Get a little bit of price confirmation. We break above the 50 week moving average as well. Not a lot of stuff in our way until we get into what, 49 thereabouts, yeah, give or take. So there's my
45's in your way.
Well, I think we have to kind of claim that to get that weekly, I guess, would be my kind of thought there, Cody. So yeah, I would agree. You know, we'd need to, I do think we have to respect the actual highs here would have been 44 and change, right? I do think we have to respect that side of things. I don't feel like I convinced myself, Tim, so I'm not thinking that I convinced you, but that's the bullish argument that I have for you. On the flip side of it, we've failed at the 50 weekly, right? We've seen that drift back down. Should we be terribly surprised if it pushes us down again? Probably not. If we take out that weekly floor, that's going to look like kind of a weird looking, but a bearish retracement on that weekly chart. So,
how you analyze this chart tells me exactly who you are as a trader. Like, because if you are a momentum swing trader, you're not going to like this chart at all. I see a beautiful support level that's formed. Mm-hmm. I see a consolidation pattern that I can play probably 5 or 6 times maybe in the next few months, you know, buying at support on my consolidation signals, selling calls or selling the position outright as it goes higher. That's what I see, you know, as a trader. Like, you know, if you're a swing trader,
it's like two different plots in a movie, right? I mean, the first of the year was a horror movie. Right now, you've got
go look at
documentary
Pepsi,
going on.
You know, go look at Pepsi. You know, a swing trader is going to look at Pepsi and PEP, you know, and they're going to look at that chart over the last 6 months and be like, that's the ugliest thing I ever see. I see numerous opportunities to buy at support, sell at resistance, cash flow. Mm-hmm. It is just a perspective. It is how you like to trade. It's how you like to approach. There are certain instruments that for long periods of time are terrible momentum instruments. Crude oil is going to fit in that category probably for many, many, many months. Learn how to trade a consolidation pattern. Learn to trade a consolidation pattern, and that chart will look pretty to you.
Yeah, it's been great for cash flow. And, you know, and Mark's right, you know, with a lot of things, certainly with crude, it really is, unless it's cooking, when it's cooking, you want in on the action, right, Mark?
Yeah,
but if it's not clearly got a lot of momentum, it is not, historically speaking, at least for me, it's not historically speaking a great directional place. But yeah, it's been fantastic for cash flow.
I really do not think that you will get crude cooking again until you have the COVID situation. I've been saying that for months. I think I've been calling a range. COVID is the only catalyst I see that can open up the economy, that can open up crude. And so you're probably going to have a stodgy boring environment, but there's still money to be made if you know how to trade consolidation patterns.
And we did have a little bit of COVID news around the development of vaccines and whatnot here today. By the way, Frank, and you got to be the judge here. I've been judging people all week on this one. Sorry, my friend, I still didn't get interested.
Listen, I
just
well,
not
you would
me.
never be
Mark's
I
right.
didn't
Nobody
expect you
can,
to. Listen, there's nothing exciting about that chart. If I interested you, then I've got other things to sell you when we're done.
Unless it's in a clear uptrend with a PE ratio of about 4,000, you have zero interest in anything.
We can take a look at Zoom. I mean,
This is
if
like
you
a
want me to
truck argument, trying to convince someone to buy a truck when they're like a Ford fan, and you're trying to convince them to buy a Dodge or something. It's not going to happen.
Just know who you are.
That's
know
right.
who you are.
You be you. By the way, I saw an infuriating article on social media about how we shouldn't use certain phrases and instead we should replace them with other phrases. And I'm about to lose my mind on that one, so I'll let that go. One of them was you be you. She said, no, just don't say that. Just be silent. No, you be you. I got no problem with the phrase. All right. By the way, speaking of PE ratios that are astronomical and charts that are beautiful, Mark, you did make me think of Zoom here. It's been a top performer for the week.
Living on the 9. When's the last time it closed below the 9?
Long time ago.
Early August?
Dude, it's been a while. It's been a while. And we came into the week here, Frank, and even in the scouting report meeting last weekend, we're all like, that might be the trade of the week. And it ended up playing itself out that way. Just a beautiful pick. How would you even unpack that here, Frank? Do you start thinking about profit taking, rolling stop losses? How would you manage your profits if you were in something like this?
If I'm in, and I hope I am, and I hope you are, and I hope everybody in the halftime reporters, because I know we've talked a lot about it. For me, I would scale out of this thing because as long as it's right in that 9, I want in on some of this action. And so as opposed to pulling up a stop loss, which could, any little thing could get me knocked out. Not that there's necessarily anything wrong with it, but since you asked me, I would probably lock in profits via selling some shares and let the rest run, especially as long as we're above that 9. At this point in time, if Zoom were to start a pullback to the 9 on Monday, it wouldn't be doing anything wrong technically, right? Maybe it needs to pull back a little bit after this 2-day pop. I wouldn't want to be abandoning all of my position personally because of a potential pullback. So if I'm thinking about profit taking, I think that's a smart thing to think about. For me, I wouldn't want to move up a stop because where do you put it? Below today's low? That just seems like I'm asking to get knocked out. Maybe not Monday, but eventually, Zoom's going to get me. I would rather scale out of the position and try to run it. As long as this thing's running, I think you want to be involved.
I agree. It's been a huge momentum juggernaut. We've talked about it so many times. Had a couple of good news items this week, but man, 12% performer from that option report. It was the top performer, grabbed my attention. Let's keep talking. Mark, you brought up some COVID stuff. Might as well talk about a few of those news
while
items.
we're talking, listen, I got it. You played the GE breakout, didn't you, Tim? I know you did.
I did not.
Come on. I know you did.
It's a nice clean break, Tim.
It was a nice little break.
Hey, it's got earnings are too close. Good job, Tim, following your own rules.
Listen, I sold 2 naked puts on GE just to spite you.
It is not a shock to me. By the way, it has found a really wonderful.
How would you like me to spend that $40 that I'm going to make on those 2? I'll let you decide.
All right. They just came out. I believe do we have Jack in the Box here locally, Mark? I think maybe you'd have to go on a trip. Next time you're at the Jack in the Box, I want you to get an unchicken sandwich, a plant-based.
Oh, they're new meatless.
Mm-hmm. Yep.
All right.
See if you can replace them.
I thought you were going to tell him to spend $40 and get 80 tacos.
80 tacos at Del Taco, little taco night, nothing wrong with that.
Because there's no way in the world I would have sold those naked puts if it wasn't just to throw it in your face and make money on GE. So,
dude, it's like the last season of Curb Your Enthusiasm, the Spite store. You've got the Spite trade,
Spite, selling naked Spite. Listen. Yeah, it's not recommended, but boy, it feels good.
Oh, enjoy. Congrats on the $40. There's no way I'm touching GE myself, but I'm not arguing with that breakout. Let's flash back through the markets, then we'll get to stock talk here, guys. Gold next, if we can, in Cody. And by the way, if you're new to our halftime report, one thing that we are just firm on, I saw a question yesterday as to why we're going through all the big picture stuff instead of individual stocks. We go through top-down analysis. That's what we believe. We're teachers first, we're educators first. And so when we're analyzing market conditions, we do start with the big picture. Some days, Frank, it's a quick read, moving on, right? But we still kind of work through it one step at a time. With that in mind, gold should be a pretty quick read here, Frankie. What are you seeing?
We need to reclaim that 50, but it's been constructive. It's been a constructive week. We've got a higher low, right? We've got that higher high that we took when we took out that swing. Still need to be patient, but you got to like it. If you're a bull, you got to like the fact that the way that we're building, right? Still a little early to get too excited unless you're super aggressive, which if you are, fair enough. If you're not, probably at this point in time, taking out that swing high and the 50-day moving average, I think you can start to map something around that.
Hey, how about we take off,
lows.
like, this is how I analyze the gold chart right now. This is how I'll do it in the commodities report and the mind of a trader that I do it at 3 o'clock Eastern here, coming up in a couple hours for pro members. Take off moving averages, put it on a weekly chart. You guys can see whatever you want momentum wise. I see a large, massive consolidation zone. Like, just a massive wide consolidation zone. Convince me otherwise.
Oh, well, the weekly chart, is a little bit better in terms of development. Back on the daily for a second, I see it as well, Mark, and I don't know how long it's going to take. But that being said, give me some moving averages here, Cody. There's a couple things I'd be interested in from that consolidation. Number one thing we know about gold, and Matt has analyzed this for so many years, and kind of helped us understand gold's price behavior. It can take months off at a time, but when it wants to rip, it rips, right? And Frank, if I do catch technical signals, I can't ignore them, because I might have a little FOMO here, and I don't want to miss out on the next run on gold. I have my core gold holdings that I'm not going to get rid of for any purpose. They're there for a specific reason to hedge against dollar, inflation, the risk in the currency market, stuff like that. That being said, Mark, a real deep pullback to like 1800 and catch with the 200, I'd be interested there too, right? So I'd be interested in this one in two regards. If it had a deep, deep retracement on fundamentals, I'd probably look to add more. And if it had a just rip off and took off of a breakout, I wouldn't want to miss the run there if I got the signals I was looking for. So could it consolidate for another month or 2 months? Absolutely. It would not surprise me. It's already done it now for what? We're 2 months and 2 weeks into this one. Yeah.
Yeah. I mean, gold does this.
But when it does rip, man, you don't want to miss it. Frank, what's your thought on that?
I agree. And it's one of those things. That's why we be patient, because until you get those, what you at least consider clear signals, you're stuck in the range, which is great for your core holding, right? Great for Mark's cash flow holdings. We want those nice, clear signals. But gold is a popper and a consolidator, right? It's been that way for a long, long time. Is it done consolidating? No, but I think if we continue to build off of this, creating these higher lows, creating these higher highs, taking out that 50-day moving average, I think that opens up the door where, well, maybe today, I don't think we've done enough to say no. I think we have to say, yeah, we're still in this range. But if we are able to continue to build into this pattern, I think you have to be open to it if you're looking to enter into a position.
Yeah. And like the old Supreme Court justice used to say, we'll know it when we see it, right? We're looking for breakouts on those pivots, but if the volume comes in, the candle's strong as well. I mean, those days like that in gold usually kind of shine. So
right now, and I have a tentative place around 1945, 1950 is kind of where that would be, but Tim's right. What does it look like? How do we get there? Right. So we'll see it. But yeah, not certainly not been the momentum monster that it was for a little while, but that just spoiled all of us. Right. I think, most of us that tackle trading are, long gold in our, long term, if nothing else. And we knew that it wasn't going to last, but we all really enjoyed it. Right. Except maybe Mark. So maybe Mark didn't.
Yeah, it's a great cash flow environment the last couple months. I mean, stay in this pattern forever and I'm happy.
Sure. Yeah. And until it comes out, it's in, right? So I'll assume that, next week we're having somewhat similar conversation until it proves me otherwise.
I mean, I do think one day we're having the same conversation when gold's at 2,500. And we're like, I don't care right now, deep pullback, I buy more. It's been consolidated. I mean, just get used. this isn't Zoom. Gold isn't going to ride the 9 for 35 straight trading sessions.
You know, one thing with that in mind, Mark, one thing I love about gold for myself personally is I don't look for any shorts ever.
Oh, ever? No. Why? Why?
Yeah, I don't
And
like to go.
it sets your mindset looking just at the one side. I mean, it's easier to kind of map out
Now,
what
to
you
be
want
fair,
to see.
I don't look for any shorts anywhere ever,
That's true. That's
regardless. But if I was going to absolutely never short something, why? I mean, seriously, why?
I agree. I agree. Let's give me the pound dollar cross pair, Cody. And if you had Brexit talk on your bingo card, you can go ahead and cross it off right now. We're going to have Mark just stepped up to get away during Brexit. You heard the dollar. And the only reason I'm bringing this up is to have Mark analyze it. Give me the pound dollar cross pair. Marky.
What are you going to have me say? Like, I've read some
Give
really
us the
smart
news.
people.
Give us
Okay,
the news.
The news is, okay, right now they're negotiating. Brexit's been going on for years now, right? The discussion on it. And, you have Merkel and you have Macron, and they're both saying, listen, we aren't going to take a deal at any cost. We need a fair deal. And the ramifications of Brexit, I don't know, right? They were a lot scarier before we had a pandemic where we've all been worried for 6 months on how it was going to kill us all, right? Brexit seems like small potatoes compared to COVID-19. So are there ramifications in trade? It's a Brexit deal would be good. What are the negative ramifications? Probably some to certain companies. I don't know what they are necessarily. The market, other than using the word Brexit, that's about all the analysis you hear.
Mm-hmm.
It's been such a non-story for years now. There's probably negative ramifications, but once again, we've learned that, just print money.
Just get it over with here. I mean,
Print,
Boris
it solves
Johnson.
everything. Print money.
Boris Johnson, if you are watching our halftime report, Mr. Prime Minister, just make a decision. Get this out of my life, please. And let's move past any Brexit conversations. There is ramifications, Mark. We don't know what it means. They've had these talks forever. And the negotiators always come out and threaten that this is going to happen or that's going to happen. And then we don't really see it. So when I see some sizzle, Frank, maybe I'll pay attention and be interested.
Sure. Yeah, it'll be a while. I wasn't interested when it was on everybody's radar. Now that it just randomly gets brought up from time to time, I'm even less so. Wait, I'll let it play out and then decide.
I agree. Let's talk stocks here now, guys. We're going to make a transition from our top-down analysis into individual company news and corporate items. We're also, Frankie, you got some charts for later.
I got a few. Yeah,
team.
Not as many as I like as we get into earnings the next couple weeks. That will just be the story for me, unfortunately. But yeah, I always got a couple.
Mm-hmm. Let's start with Boeing. Give me Boeing first. The European Union Aviation Safety Agency, their version of the FAA over there, came out and said the 737 MAX is safe to fly, and they're going to approve that for the airways at some point soon. You've got a neutral consolidation range over some time. I've been off Boeing now for months and months and months. When it was ripping, obviously, I'm a momentum trader playing that directionally. That was interesting when that whole thing was happening in May. But now that it's been in this consolidation forever, I just really don't have a lot of interest. Frank, is there something in the chart though I'm missing? I mean, would a breakout here catch your attention up to the 200? I know we've got earnings coming up, but what's your read here on Boeing?
Well, first off, Boeing is one of the very few stocks that I don't want anything to do with. I'm not open to trades on Boeing. I really, really dislike this company. I really, really dislike how sensitive it can be to news, one day news type of stuff. It is not on my list of things to trade at all. Could you talk me into the breakout? No. I mean, let's say you do break out at that 174, 175, you've got, 186, right? You've got all of the same nonsense that the whole market has, right? So it's not like Boeing has been impervious to market news on top of everything else. I'm going to have lots of breakouts to trade. I mean, Tree brought up, Take-Two, EA. I've got breakouts in, video games I could play. There's no way I'm choosing a Boeing break over a break in a video game company. So no, this is really in a sideways range. My personal, bias against it notwithstanding, I mean, we really are in the middle of nowhere, right? We're just stuck in a range, pretty tough to trade directionally.
And real quick, Damon did ask me a question directly I want to answer. He says, Tim, how did you treat gold in 2011? I remember back around that time. In fact, right after the financial markets crash, Damon, is the first time I really got interested in the metals market, but I didn't have nearly the fundamental conviction. When you're a young man, the idea of buying gold to hedge inflation, you might understand it logically, and you might agree with it, but it doesn't necessarily mean that always affects your decision making. And for me personally, back then, I was just trading gold. I didn't have core holdings, didn't have the same fundamental conviction. Maybe I'm just becoming an old dog, Frank, thinking about it differently. The longer I see these markets and market manipulation, the more I hear Matt, quite frankly, Matt has been a huge influence on my read on gold for years, like many things in my life. And the more I've seen this thing play itself out, the more fundamental conviction I have. So I treated it differently back a decade ago. Mark, did you have metals, in your trading early in your career? Is that something you were as interested in as you are now?
Oh no, I did. My love for commodities developed years later. So like, and I think one of the concerns is for people is like, well, it went up in 2011, it's going up now, it's going to crash again. Listen, the thing about it is that as long as this is how I view it, as long as you have a long-term horizon where you have a loose monetary policy and you're pretty sure of that, and that you're going to have stimulus spending and you're pretty sure of that, gold has a positive fundamental backdrop. And so, like, for me, I ask myself, and I go through, like, once a month about on gold. It doesn't take very long, right? Fed has been very telegraphed. They're going to keep interest rates really low. The economy is kind of broken. It's going to need constant stimulus. It provides a positive fundamental long-term backdrop for gold right now. Now, if that changes, if that starts to shift, then we can shift our analysis of what we do with our holdings, whether we buy protective puts, whether we sell really aggressive calls. But until that shift happens, you got a great fundamental backdrop for gold.
Mm-hmm, mm-hmm. And I don't know if Damon was implying that the technicals are similar now to what they were then, because when I look at that chart, even historically, Cody, give me that 20-year one more time, real quick. I mean, if you're selectively kind of picking, you could say, well, yeah, look at where it hit the top and then started consolidating. First of all, the consolidation took almost a year and a half before it broke down, Frank. That's number one. And this actually feels just as much like 2010. Go back even further, Cody, if you can. 2008, 2009. I mean, so many of those uptrending markets where gold was in, Frank, you tell me where a trend's going to stop, and you're probably a better technician than I am. As long as the trends are intact, I think you got to focus on them that way. And also the fundamentals here change my analysis too. But yeah, it's tough to know. I mean, just by looking at a chart alone, I would not try to guess when a trend is ending just because it's up at the top.
Oh, no. No, that's a tough thing to pull off with regularity.
Mm-hmm.
Sometimes you're right, you look really smart, but a lot of times you are not right and you lose money.
Yep, that's right. All right, back on stock talk here for a bit. I got several items I want to go through. Let's start with Pfizer next, if we can. Mark, you didn't have any interest in the Boeing news, I'm guessing.
Well, I mean, see, I like Boeing, but once again, like, I do things on, like, I love news-based trading. News-based trading is going to drive a pure technician nuts.
Mm-hmm.
So, the Tylers, the Franks of the world, something, because Boeing has like a news item every 10 days, right? And you don't know when it's going to come. It can blow up a trend. It can mess with your trade. Doesn't affect cash flow trading as much as it does directional trading.
Mm-hmm.
Mm-hmm. Let's move on to Pfizer if we can here next. Talk about news-based trading. The healthcare stocks have had it all this year, and Pfizer here again today said that it's going to apply for emergency use of the coronavirus vaccine as soon as it reaches certain safety milestones. They put a letter out there from their CEO developing it, and they're looking at maybe even a late November push on that, whether that gets approval, what it looks like. Cody, I'm sure you would dig into the science. Mark, vaccine news here around Pfizer. What's your read?
Well, from a technical perspective, that's a nice little breakout.
Yeah.
Mm-hmm. Now, when you trade Pfizer, you have to understand, you're not getting $18, right? Pfizer isn't going to zoom it. Like,
yep.
Like, once again, know your thing. It's nice little breakout within a consolidation with like a 38.80 target. I got earnings coming up though.
Yeah, earnings soon.
Well, and these individual healthcare plays are becoming much more difficult. You know, when I think of healthcare right now, Frank, I actually think about the sector and maybe even playing through the ETF because the individual nature of the news. I mean, yeah, Pfizer's up here today. Look at Gilead. Gilead also had news today around their remdesivir that basically there was a study out of the World Health Organization that there was no substantial effect on the survival of hospitalized patients who used remdesivir. If you remember the news earlier in the year, if you were on our halftime report at all, remdesivir would come out, it would pop a news headline, and then boom, stock would jump. You know, we jumped up to 86 a couple of different times, and the market faded all of those reactions now for quite some time. So it's hard for me to chase any of these companies that are news driven in healthcare right now, Mark. Frank, what about you? How are you approaching these kinds of stocks?
Yeah, these kind of stocks, for the most part, I've just been steering clear of. I think the ETF makes for an interesting instrument, although it's been a while since there's been a really clean signal there. I've kind of stayed away from them. The devices I've been more open to, the animal health type like Elon, I've been more open to, but the stuff with the vaccine, again, Mark nailed it. Anything that can just news out of nowhere, it does drive directional traders insane because news doesn't care about charts, right? And so especially in the shorter time frames, and so it's things, if there's things like that give me concern, I'm going to shy away from them. Most of the time I probably didn't need to, but I feel a lot more comfortable when that's what I'm doing.
You don't trade drug companies based on hopes or thoughts of the drugs themselves. You play drug companies based on more of their fundamentals. That's why I say, like, the only drug companies I trade are J&J and Pfizer, but that's because they also have staples within what they sell that are constantly out there.
Sure.
And that makes them less of a, pharmaceutical drug type company, even though they do create drugs. But because they have those staples to go along with it, I feel more comfortable with those companies than I do with a Gilead, where like all this craziness right here is just news surrounding the drug, and then it just fades off like Tim broke down. It's like, why try to play in these waters? Why not just play it when it has a nice setup? You can't control the news. You can't read the news on what's going to happen day to day. You can read charts and technical analysis, and I don't see anything with this.
Well, I see bearish.
I see a possible bearish breakdown here.
Mark brought it up a while back. It's such a major level of support.
Yeah, you pull up a multi.
I mean, it's an interesting that might get me interested if that gives out.
Because I have interest in Gilead, the company. The problem is, if you get a break of a major technical level like that, like I love to bottom fish, but like I also, because I do understand technical analysis, and I do know what happens when you get in clear air. If you get a break of that support level, you could have a massive algo selling trigger stops. Because how many people own Gilead and have a stop loss underneath that support level?
A lot.
A lot. How many people are going to be buying protective puts if that support level breaks? A lot. How many algos just love, they don't give a crap if that's Gilead or Apple or Zoom or anything else. They see clear air, and those algos just go on a feeding frenzy. I mean, go look at DraftKings, like, when you've had support breaks, when you've had these huge pockets where you don't have things, algos just eat up those pockets of clear air. I mean, look how fast DraftKings, when it broke the 20 moving average, it just engulfed down to the 50. Algos are relentless like that. And so if you have a break on Gilead, man, it could get ugly in the short term.
By the way, while we're talking here, boys, the market is developing a little bit of an intraday support hold and a test. Take a look at the NQ or the ES real quick on the 5. Little defense here today, Frank. I mean, I would love to see the market kind of just fading into the weekend, getting setups ready for Monday, all that kind of stuff. We're seeing a little defense.
Dude, I always love the Friday rally because it's just everyone wants to have a good weekend.
It's true.
Like, it's like, let's rally, and then we've seen this. We've seen rallies on Fridays, and then like there was like the big rally out of nowhere on Friday and then a huge sell-off on Monday. Let's just rally. Let's have a good weekend. We'll come back on Monday and deal with it then.
Yep.
Yeah. That's true. I mean, you don't really want to go into the weekend thinking, man, I've got to sweat this out for 3 days thinking about my leverage
nobody
or
wants
my
to do
delta.
that,
I mean, come on. I want to have a barbecue, watch some football, play cards on Sunday. Yeah, for sure. I'm going to do all those things no matter what, by the way, Frankie. But let's keep moving through some stocks. I only got a couple more. We're going to get to charts from Frank here in a minute. Some upgrade, downgrade stuff. But before we get to that, General Motors here next, if we can. Now, this kind of news gets me, optimistic and hopeful for the progress of technology, but it also terrifies me at some level. GM, their Cruise Autonomous Vehicle unit is pulling the human drivers that were backup drivers in San Francisco to make sure that if there was an error, you had a human in the seat, right, Frank? They're pulling that because they got a permit from the California Department of Motor Vehicles, and they're going to actually put this out on the street. And they even said, we're not the first company to receive this permit, but we're going to be the first to actually put it in the streets of a major U.S. city. The market likes it. GM's breaking out here. That deep pullback ended up holding. It's been running now and developing. The news itself, Frank, the idea of being in a city where there's cars running around without humans in it. How do you feel about that?
I'm excited about it, but I think you summed it up. It's exciting, but a little scary. I'm stodgy and boring. So, I like, I still like to have to roll my windows down the old fashioned way, for air conditioning. It'll take me a little getting used to, but it is pretty cool. It is pretty cool.
It is really cool. I'm with you though.
I live in a small town, so I probably won't see them. I'll let you test them out, see how it goes.
Dude, I guarantee you're
going
to
to
see
me
videos.
with this news is don't they have the drivers are also there to actually, park or pull it into like weird spaces or tight areas the driver would take over where they're not in his car? Because they're great when they're just on an open road, but when they start getting to like the back alleys and things, like if we're gonna back the truck up for a load or something, humans are doing that. Are they just gonna have people waiting for the truck to arrive and then get in the driver's seat?
I don't know the logistics on that, Cody. I'm sure we'll get more information as they put this out there. Maybe it's just select delivery units, or they know that it's going to a certain location. They've tested it. I don't know. But I do know this trend has been developing for the better part of 5, 8, 10 years, and it's not going away. You are going to see this more and more and more through your lifetime, Frankie, stuff like this. Yeah. Yeah. All right. Let's keep talking some upgrade downgrades here today.
While we're on GM,
the breakout.
Nicola had news on GM that basically the company was going to do walk away from GM. That's tied, basically, hey, we can survive even without GM. Obviously,
survive without building a single car or truck.
Did Nicola make our list of shorts this week?
It was on the short list. Yep, it was on the weekend in the option report. Actually, it developed very, very nicely.
Oh, it was beautiful, right? Comes up to the. You hone in on that recent price action, because this is some textbook shorting here. You have a little bearish retracement up to the falling 20-day moving average. You then develop an intraday support level. This is a textbook situation. And then you have a level, an intraday support level break. Falling moving averages, boom, break. And once again, when there's that pocket of clear air, when you don't have support, algos, traders eat that up. That's where you want to be as a trader one day, where you recognize those things and be like, yep, I'm going to eat that up. And a nice short call by the team at Tackle Trading.
Mm-hmm.
If Matt was here, because Matt brought it up, Matt's like, hey, Matt suggested that last Friday. So.
Mm-hmm. Mm-hmm. It's a beautiful little setup there that did develop. I didn't see the news on that, Mark. So they did say they're willing to walk it back, or they did.
They're like, we can make it. Like it feels like the GM deal. It feels like a CEO. That we can go it alone. The specific quote was, "We have the ability to have a base plan of doing it ourselves. If we have a partner that enables us to consider going faster and helps reduce the risk, that sounds like negotiations aren't going too well with GM
It doesn't
to me.
sound good. By the way, while we're on cars, one last thing. James Bansberg in the chat here, and James, I can agree with that. Even here in Utah, he says, living in Chicago, I trust human drivers less than AI."
That's funny.
It's not a bad call. There are some pretty crazy drivers out there.
Yeah, because Tim,
Come
if
to
I
Utah.
tell you, hey, I don't need tackle trading, I can go it alone. You know, well, even if I don't say I don't need tackle trading, if it's like I can go it alone, yeah, that's not good. That's not good.
No, that's not a position of strength there from Nicola. I agree.
So and so I think on Nicola, I think eventually you're gonna get more of this rumors. It's gonna weigh on sentiment. You know, yeah, not good.
Yep. All right, let's do some upgrade downgrades here today to get you guys' take on this. Let's start with Netflix if we can. Brought these guys up a couple times. I believe they got earnings coming up here real tight. Is that next week, Cody? I think we've already looked at that, but I believe it is, isn't it? 20th? Yep. Now, Bank of America, Mark, raised the 12-month price target on Netflix to $670. They have an overrate rating on the stock, and they actually upped it from 630 as well. Barclays raised the price target on Netflix as well to 570. Couple of different double whammies here today. Mark, you agree or disagree? This is a huge momentum play. I know that Netflix is a very popular stock, even in our community and amongst all traders out there. Do you still see bullish opportunity? Because I know we broke this down with Matt yesterday, that triple top, if you can get a breakout after earnings, I would be interested on momentum. But Mark, what's your read?
I mean, let's go back it out in time. Let's understand the stock's personality, right? Like when you have clear breakouts, and we kind of had a similar one in earlier this year, post thing, where you came up to about 460, came back, went up again, came back, it broke out, and then immediately faked out before taking off. It can be tougher. Netflix is not as technically cohesive as your average stock. A lot of chop in Netflix, a lot of chop. I like, and as such, I like position trading Netflix better than I like swing trading Netflix. Day trading Netflix can be really fun too. It's just know your stock's personality and know that this thing can be really choppy.
Yeah. Frankie, what about you? The stock personality, the history of Netflix, obviously going into an earnings report, you're not going to play a directional play. But if we give me the weekly chart on that, Cody, because I know, Frank, you love the longer time frames. Are you interested post earnings of a breakout potential?
100%. I mean, that is a textbook consolidation right at the top. Nice, nearly $100 range. Yeah, we've got earnings, and that could throw a lot of cold water, or it could just gap it and just run it without us, right? But if we can work into it and break through that on earnings, maybe it's not the day it happens, but if we can get above that, I think we are absolutely bullish on Netflix. How are we trading it? Really hard to tell until we see it, right? Because it could gap and open up at 600 versus it could open up at 555. It opened up at 555 the day of earnings. Keep an eye on it, I think, see if it breaks that day. But yeah, to me, if it breaks that resistance level, why wouldn't this be on a watch list? I mean, it wouldn't make any sense whatsoever. What did you say their target was?
We had a couple of them. I believe 670 was one of the ones I saw. 670, yeah.
So it looks like they're going about the targeting a past resistance by about the trading range. It looks like.
Yeah. I can see it. I could see that another $100 range there on a breakout up here at the 570 mark. I mean, it's been in this $100 range, so it would not, be unexpected. Be interested in it post earnings. We'll get it next week. Let's play this game a little bit different here today. What I'm going to do is I'll flash through them rapid fire style. I've got about 5-6 of them. And Mark and Frank and Cody, you guys tell me which one you're interested in the most out of all of the upgrades that I saw here today. Cody, I'll give you the data, then we'll stop, have a conversation at the end of it. Chewy got an upgrade out of Jeffries, CHWY, young man. There you go. Upgrade to a buy from a hold. Caterpillar got an upgrade out of Wells Fargo. Beautiful chart there. To overweight from equal weight. Costco Got an upgrade at Jeffries to a buy from a hold. Tesla got a price target upgrade. It's like upgrade Friday here today, Mark, to 333 from 272 at Morgan Stanley. That dude is eventually going to catch up to the price. It's so funny. Chipotle.
What is it? Chipotle
G.
G.
Yep.
CG.
Chipotle got an upgrade to $1,500 price target from Credit Suisse. T-Mobile, TMUS, Cody. Poor T-Mobile can't get the pub it needs, and yet look at the trend over the long term. T-Mobile got an outperform at Evercore, and Campbell's Soup, CPB, got an upgrade to a buy from a hold. All right, I'll start with you, Mark. Which one of those are you most interested in?
I think Costco and Cat have the most juice behind them. From a sentiment standpoint, I think you have momentum. I think obviously both a little overextended as we talk on a Friday. I think if you wait for patterns to develop here, that's where the juice is right now in the market.
Frank?
I would agree a Cat pullback is probably the thing I would like the most, but that's going to take some time to develop. So I think Tesla would probably be the one that jumps out the most to me. Technically speaking, taking out resistance, not a lot beyond here. I think if we can claim this weekly high, no technical good reason not to go back to 500. So it seems like this would be the easiest one to prep and build a trade on going into the early parts of next week. So that would be
what day is earnings on this one, Cody?
Oh yeah. Way to throw some cold water. So never mind. Wake me up 2 weeks from now. I'm going to take a vacation. That won't be the last time I do that, I promise.
Cody, if you pick Campbell's Soup, I'll be very, very surprised. Which one of those stocks were you most? Which one were you most interested in?
I'll
give it to you quick. Chewy, Cat, Costco, Tesla, Chipotle, T-Mobile, or Campbell's?
Honestly, and I don't trade too often, I think I might go with Chipotle.
Yeah, the dreaded earnings coming up. We're getting these upgrades right from the earnings. I think Cat and Costco, Mark, I think I'm with you, actually. Out of the ones that grab my attention, Tesla in 2 weeks, you bet. But we've got this earnings situation with so many of these companies right now. It's going to be interesting to watch. Upgrade Friday from Wall Street. Yeah, it is. It's a momentum beauty, though. A pullback is what I'd be waiting for.
Pullback, let it make a little cup and handle for you.
I mean, here's the thing, right? When something gets hot, and we've seen this. I mean, would it surprise you if Cat lives above the 9 for 20 straight days, right? And so waiting for a consolidation pattern breakout or a pullback to the 9 and have a nice pattern. Gosh, damn it. I'm going to have to find, I got to kick something off my list to put Cat on it because I like that pattern.
Kick off GM.
You know you're going to kick SeaWorld off, so just
I got GM got kicked off weeks ago. SeaWorld got kicked off yesterday.
Yeah.
I had to get Morgan Stanley on the list again. I thought Morgan Stanley, I wasn't here this halftime report when we had Morgan Stanley earnings. I thought Morgan Stanley's earnings were fantastic. I think the stock's cheap. So I had to get Morgan Stanley on there. But I got to kick something off here. I'll prove. You guys talk. I'm going to find something to get the boot here.
Well, actually, it's a good time for us to transition as well into our Friday segment where Frank has some charts for us that we're going to break down. By the way, if you're out there and you're watching our show right now, welcome out. It's been a fun week of shows in the market. We love coming in here and hanging out with you guys on a daily basis. Hashtag Team Tackle is our official hashtag. Whenever you pop in, put that right in the chat. Like the show, get the word out, subscribe, and click the bell. Frankie, you're up.
Well, but before we go, I can't believe you missed this story, Tim. Coca-Cola is retiring Tab at the end of the year. Tab soda. Yeah. Tab was first introduced in 1963, but some people here probably don't even know what Tab is, depending on how old they are.
Tim, I don't know if you remember, Mom, when I was a kid, drank a lot of Tab.
It was the Diet Soda. Before Diet Coke, it was Tab. And so once they once they, you know, threw out some Diet Coke, they're like, wow, this tastes a lot better. So farewell Tab. It's been a long, long time. I remember as a kid, though, my mom also used to drink Tab soda.
Dude, Tab was that's a blast from the past with you know, my family for sure. Mom did like Tab, then she got into Diet Coke forever. She doesn't drink much soda anymore, but back in the day, she used to have one of those big 64-ouncer type things, Frankie, and just Diet Coke all day long.
My mom was the same way. Had the big giant mug that you could fill up at the gas station, and she was Pepsi. The diet, she said, diet was for the birds.
Mark, do you remember what soda Grandma liked?
I do not.
Mountain Dew. It was her
Did
favorite.
she?
She loved
Mountain Dew. I love me some Mountain Dew.
Oh yeah, oh yeah. Tab. Well, you know, rest in peace there, Tab. I'm sure there's
It's
a
getting
reason.
canned.
Oh, play good, man.
Took the low hanging fruit. It took the low hanging fruit. So I just thought that was you know, deserved farewell.
I'm glad you brought it up. That's interesting.
So, but it's probably not as much fun as charged. I'm gonna go through these in no particular order here today. So I'm gonna start off with a bear, and that is CF Industries, ticker symbol CF. Cody.
I like it.
Got just a nice little.
And this is actually what Mark was just talking about. You know, there's a clear intraday support level, which is very obvious to see, and you can see that right here on the daily chart. And then afterwards, you know, where's the next level support? Well, it's down here. Then it's below all the moving averages right now. I like that chart.
Yeah, and this is what it's been doing in a strong market, right? Not particularly all that confidence inspiring. That 9 getting ever so closer to maybe give us the push we need through that little floor. Some of these, this guy's gonna be a little tight, so I'm gonna throw this one to you, Tim, and that's Dow DuPont, DD. A little breakout developing, a little bit of a breakout. I think we've got, and I just did my first check on earnings. I think we've got almost 2 weeks. I think they're on the Thursday of 2 weeks from now.
So the 29th, is that what it said?
I believe.
Yep, 29th is Thursday.
All right. So, and by the way, out there, Team Tackle, I'm going to take a second, try to help you guys. If you don't already know the way that we process earnings reports on our scouting report, on the report, this would be vetoed on that alone, just out of the default rule, right? Because we say it's got to have 2 weeks of time, and we're just under that. But from a trading perspective, Frank, if I'm swing trading, the 29th is still enough time for me to execute a trade. Just on our official reports, we always want to make sure there's 10 trading days between the earnings report. Man, I think I could pull something off on that if I catch a breakout. And I do like the longer term consolidation. DD, you know, we've talked about the move into industrials and some of the other areas of the market. I could be interested here, Frank, for sure.
It feels like this is one of those that you could see a quick little pop, because there's not really much until, you know, just shy of 64, right? If we can clear this current top, not a lot of resistance, not a lot of time, and so it would be, you know, we have to factor that into all of our trades, right? Not just Dow DuPont. But I do think if, you know, your rules depending, of course, there could be a little something in there for us. On the breakout side of things. Let's see, this one's going to take too much time. Well, we got 18 days, I believe, till earnings. So Lyndon Basel, LYB, Cody. I'm looking at these guys developing a little cup and handle breakout at about $80. We got a little bit of time, so it's going to be close. You know, what I probably really hope is we kind of just chop for the next 2 weeks and then have earnings and then can see where we go from there. But I do like the idea, you know, chemicals have just been very, very strong, right? And so I do think it's a good idea to have, you know, some game plan for chemicals on your watch list. Let's see here. Tree brought up some of the video game companies were kind of interesting. Tree brought up Take-Two. I was looking at EA, Tree, but I think in many ways they're very, very similar to one another. Potential break on either of these, something that we could get behind?
100%. I've been surprised because the fundamentals on video game numbers have been pretty decent. You know, you got new consoles coming out. This feels like an area of the market that's going to run. It needs a little catalyst, something. Like the fundamentals, like the gaming. I like the technical setups occurring here too. So absolutely.
Let's flash through a couple
100%.
others. TWT out of the two there, Frank, I think I like Take Two more.
I think it's real close and will probably depend on you. I think I like EA a little more, and I hate to say it because EA and I have had some issues in the past. So, but Take Two, it definitely is ahead of the game, right? It's already broken through those moving averages. They've caught back up, taken out this, this weekly high. Not a lot until we get into 175, 176. So, coming, looks like a bullish retracement pattern on the weekly chart. It'll be yours. Kind of pick your
preference. Look at C.
When do we got estimated earnings on EA?
I think they are about 3 weeks from now, Mark. I believe they're the first week of November, if I'm not mistaken, like the 4th or 5th.
Yeah, we got time for a trade here in that regard. Look at SE real quick, Cody, just while we're in the space.
SE?
Yeah. More of a position trader, maybe, Frank. I mean, could you just go with the trend here, or do you like the breakout potential of the others better?
Again, I think it probably comes down. I think most likely they're running together. I like the break personally. Just that's my
Cleaner
style
execution of a trade.
Of things, a little easier to prep. But I really think that the most likely scenario is these things run together. They typically do. So, you're kind of picking your favorite for whatever your reasons are. To me, I think it's either Take Two or EA that I like a little bit better.
Like best. By the way, I love the area of the market, and it's been a little bit on pause here for a couple months. So now it's starting to come back a little bit. I'm excited, interested for sure. Good find on that one.
So just shout out, Tree. Good looking out there, my friend. Maybe another one on the bear side, News Corp, NWSA, Cody. Just a cheap little $14 stock. Developing a little bit of a floor. Again, those falling moving averages are starting to put pressure on us. Certainly not a swing for the fences type of a trade, but a pretty clear floor developing, I felt.
Is there enough room here? Does that moving average come into play for you? The old resistance? I think you got cheap risk, right? Because you could probably put a pretty tight stop in there for a swing trade.
Yeah, and for me, that's basically the approach I've accepted from the bear side in this market. I'm the type of trader that likes to give things time. I scale out. I'm very slow to move stop losses. But that has not worked well on the short side for me within this market. So I'd be looking at more kind of, I don't know if bar by bar is quite the right way to say it. But I do think that probably we could get a risk to reward mapped out. And like I said, it is cheap risk. It would be a fast little through the floor type of a trade is all I would think.
Gotcha. Okay.
All right. What about WB here? This is not really my cup of tea generally, but I saw it, and I know some of the other coaches and maybe even Cody is going to be interested in this one, kind of pulling back into an old resistance zone, testing it as support.
Don't want to cut you off. Give me a lot of time on this one real quick, Cody. I think context on this one is important. Just, even more. Oh yeah,
he wants all the time.
I want it all. See, if you look at the chart in the short term, obviously it's been under pressure for a couple of years, but I remember Weibo when it was a juggernaut of a bullish stock. So, I think if you've traded something in the past, maybe that bias works for you. Maybe it works against you. Hopefully you're open-minded enough just to trade what you see in front of you. But Weibo has been a runner, a momentum play, one of those hot stocks. I think it was 2016, 17, 18 there that it was just taken off like a rocket ship. So if I get reversal characteristics, I could definitely start adding it to a short-term list and whatnot. Now back on the daily there, Cody, let's take a little bit more look at the detail here. You got to like the development there, Frank. I mean, consolidation for months, holding support, then lifting the support zone by a couple of bucks there. It was holding 30. Then we moved that up to where it's holding like that 32 range. Now we've broken out, retest. I'm at least interested. Maybe I'm wanting it to develop a little bit more in the trend, but I can see what you're looking at there. Marky, what about you? Weibo.
You know, it's funny how different people see different things. I see that quintuple bottom that formed just north of 32 in June, July, August, September, October. I mean, every time it came down to there, it stuck, it stuck, it stuck, it stuck. I definitely will be playing that if it comes down to 32 again.
Right.
That is some massive short-term support over multiple time frames. I mean, that looks like a commodity chart to me.
Yeah, I could see why you'd say that.
You know, but I think there could be some juice here. I like that. It's a textbook pullback to the 20, a little deeper. That's why Frank says it's not his thing. So, I mean, I like it a couple different ways here. I won't lie. I would like to have a couple days, hang out, break some short-term intraday resistance, get above that 9. I think there could be a nice little swing trade up here to that most recent resistance point down under 42. I like that. I like that setup.
Cool.
Yeah,
Next.
yeah. I know my audience. Yeah, that's not my kind, but I know for most of the other coaches, they like those type of trades. Let's look at GSX.
GlaxoSmithKline sighting, huh?
Actually,
it's
GSX Tech Ed. Yeah.
What is GlaxoSmith's ticker?
I don't remember.
I rarely get stumped on a ticker. Even Tyler can't get me. So now I'm gonna have to look that up. All right, I see it here. What are you seeing, Frank?
Well, so we saw a little bit of momentum coming in right after the fairly deeper pullback, pop drop, created that higher low, created a higher high here last week, breaking through resistance, pulling back, testing that 9, rising 20s creeping on us. We're also using that old resistance zone, couple, days in a row where we've seen buyers step in off of the intraday low. So it looks like maybe we're showing a little momentum. Maybe we need a little bit more time on these guys. If they're a popper on Monday, they're probably too fast for me, I would say, but that is just me. So I'd be looking at it a pullback to the breakout point primarily.
Cody, this is your kind of pattern. Does that grab?
I like it. No, I definitely like it, and I like the easy 2 targeting as well. Like Frank just said, that previous point there, second target would be pretty simple as well. I could see very cheap risk just being able to use this doji candle as your stop. So I mean, your stop could be, right there. So I really do like this one for the risk reward ratio as well as the 2 targeting.
Cool. Okay. Next.
All right, couple more here. Let's look at the fake NVIDIA, NVTA. And I'm sorry, in Vitae Corp, you'll always be the fake NVIDIA to me. These guys just had a ton of momentum, right? Their most recent swing was just nuts, running from 44 to 50, 53, like it just was pennies. Pull back a little messier than I like. Maybe we do need a little bit of time, but with the overall momentum that this stock has had, I just have to keep them on my watch list for another swing to the upside if I get the signals.
Sure.
I wish I had more behavior on how the stock trades with this pattern. Do we have any historical context on this one?
Not a ton. These guys were in a range for such a long time. They're a recent mover. Maybe back in the so this is kind of their, I don't know, maybe their new personality, if you will. They don't have a super long history, but I do know that they've got a ton of momentum. Now, on the negative side, the last time we looked at them was when they were kind of flagging there at the 9 back at the beginning of the month. This time we did break through that, and so I think last time was probably a better setup than this time personally. But as long as we're holding that rising 20, I guess I kind of want to see what kind of signals I get if we test that 20. If that gives out, I think this is pulled back too much for me, at least in the short term. So it'd be important that that rising 20 holds a support for us.
I like companies that make money. They don't have a single positive earnings.
I like companies that make me money.
I don't like trading drug companies.
No, fair enough. Fair enough. Fair enough.
Like this feels fishy. I just
feels a little fishy. All right. All right. This one's a little different, Tim. I'm curious what your guys' take is on ACN.
Ooh. N as in ACM or N?
N as in Nancy.
Oh.
Yeah.
Although ACM has a nice little breakout.
Yeah, it
I was
does.
about to say, I was like, hey,
Yeah,
ACM.
there it goes.
I was like, ACM.
Probably
That's
like
a good
that.
one.
Maybe that one's better.
Like ACM, that's a nice, like, listen, come down in the 9 pop consolidation, high base. That's a pretty setup.
Yeah, when do they have earnings? Before we look at ACN, when do these guys have earnings?
11:10. We got plenty of time on this
Got
one.
plenty of time. That's
Add this one to the list.
I'm going to right now. I'm adding it as we speak.
That looks like a utility chart.
Dina
I don't know what
says
they
it
do.
sounds like the Illuminati have invaded tackle trading. Let me be very clear, Dina. I have no comment on that. Okay?
Designing, building, financing, infrastructure, assets for governments. So they're infrastructure. Not
That's a
necessarily
pretty
utility.
chart.
Yep.
That's a pretty chart.
Yeah, that is. Yeah, nothing wrong with that. It's definitely a cleaner chart than the ACN chart I was going to make you look at. But I still think these guys are really interesting, personally.
Yeah, a little wedge there developing too.
Got a little wedge developing. We had that big drop on earnings, right? Buyers came back in. We've reestablished higher highs and higher lows. Wedge into the 50-day moving average. I know Matt would probably say he doesn't like to trade these triangle patterns, right? And that's more than fair. But if we were to break, and I think we can call it just north of the 50-day moving average, that takes us out of the descending trend line, the highs from this week and last week, the 50-day moving average. I thought it was an interesting thing to follow if we were to break through that. And I just want to get other people's thoughts on that.
Here, I rarely play the symmetricals either, but one thing I like about this is that you have the higher lows developing, higher highs. You also have those clear technical entries with old support and the 50. There's a lot of things lining up for the trigger. Now, reward to risk. I mean, I'm sure you can map something out with that from an intraday perspective. So is it the pattern for everybody? No, it is not. But I like the clarity of the entry point here, Frank. I think that it's right there and it's hard to argue.
Yeah, the entry is pretty clean. And one thing you can do, and if you don't like to trade these triangles, and I know a lot of people who don't, and again, that's more than fair. You're supposed to trade things that you're good at and you feel comfortable with, right? And the rest let somebody else deal with. Let's say we get that break. Just look for the pullback off of that next break, right? To get that confirmation. Nothing wrong with that. If it just runs, straight to resistance, well, just congratulate everybody who was braver than you, right? But if we break, pull back, a lot of times that 9 is going to be creeping back up, right? And give us a potential pullback opportunity. I thought this was a very interesting looking chart myself.
Yeah, good find. I like it.
Here, I'll do Tyler's arrow.
Now there's a line. Now we have an arrow.
There we go.
Yeah, that's a little too steep of an arrow for me, but the general idea.
2 arrows.
Well, now you're just making it difficult.
You draw 3 arrows, I'm out. Just too many. Oh, hey, what's up, James?
The third one, I'll just go straight down.
God, now I'm completely out. It's just too much.
There you go.
Too many choices makes me out. All right.
Sometimes that is the way that it plays, right? You just never know how they're going to play out. And hey, James, good to see you, buddy. Hope you're doing that. Hope you're doing well. What about Home Depot? We looked at Home Depot just briefly in passing here when we were talking about the discretionary sector. It's been a strong area in the market. Lowe's has been, moving and shaking, right? They were ahead of schedule. They broke out a couple weeks ago and have been moving. Home Depot had a little bit of work to do. Another coming out with a little bit of a downward trend here a couple weeks ago, knocking on the door of resistance at approximately 290. Seems like to me, if we break this resistance, a fairly easy ask to try to get to 300. And that's just kind of my thoughts on it.
That's a nice chart. That's a nice chart.
W pattern in a sector I love, with earnings pushed out far enough to trade it, pressing a resistance breakout. In a market that I have ranked bullish, I like it a lot. Liquidity there, big name, all kinds of options you can trade. Definitely going to be on my list, Frank, for watch list for next week.
So yeah, I thought they'd probably be on everybody's list, and probably for good reason. I would say. All right, I guess one more conversation one, and let's look at a couple more quick bears really quick. CCEP, Cody. Coca-Cola European Partners. Apparently Europe's taken the news of Tab retiring poorly Just another little breakdown candidate. You still have WIN as well, WINN, that has continued to hold support. And the longer this happens, the more I kind of believe it's going to want to hold it,
I'm with you.
but hasn't done enough to tell me that it shouldn't remain on a potential bearish breakdown list.
Yeah, and the casinos, they've got terrible sentiment behind them right now, obviously. And there's a lot of fundamental reports about traffic and foot traffic in these casinos, not just in the U.S., by the way, in Macau, that I've read recently. I think casinos to the downside.
I had a friend
are a play.
went down in Vegas right now. Vegas, the report was, what was the word? Depressing.
Dude, who wants to go to Vegas if you can't hang out
Said
with people?
nobody
Have some
is
fun.
there.
Yeah. Yeah. Empty Vegas sounds like post-apocalyptic, film.
Listen,
Yeah,
I'm all about a discount on some things. I'm playing movie theaters right now. I'm playing some things at the bottom. I do Naked puts a lot of things. It still feels like this is really high for a discounted stock with an uncertain future, and that is a good breakdown level if it occurs.
I agree. All righty.
All right, and this is just one I wanted some takes on, particularly yours, Mark, and that's Clorox.
Black, it's not black gold. It's
Clorox ticker.
CLX. They caught it down.
Clear gold.
Clear gold. Ooh, interesting.
So we've seen some reversal characteristics, right? With that, these guys were just awesome throughout the first part of the year, right? They were kind of a darling because we're always buying bleach type of stuff. Got caught up in a pretty steep retracement over the last few weeks. Been able to create that higher low, been able to make that higher high, pushing above the 50-day moving average, pulling back here today. Could I sign anybody up? And I want Mark's take for sure. But I'm open to Cody's and Tim's too. Could I sign you up, Mark? And what would it take technically to be interested in Clorox?
And doing what here?
In just trading Clorox, and I'll let you trade it however you want to.
Listen, Clorox is a tough one right now. If you do anything, it's cash flow oriented, either to the bullish or the bearish side. I know that for 100% certain. That stuck a floor pretty heavy, even as the market was selling off start of September, right? Clorox was sticking a bottom in even as the market was selling off, which shows some like real genuine buyers. It hasn't flown. I think we're going to get on top of COVID. Technically, it's a staple company, which is just tough anyways, right? Go reference Pepsi chart. So maybe looking to buy at the bottom on a reversal cash flow style, but I'm not going to rush to go put it back on my list right now.
Fair enough, Tim.
It's a good position trading candidate. It would not surprise me because if you look back here, Cody, and keep it on the daily chart, just go back to like a year of time. Obviously, we know the COVID situation obviously made Clorox such a juggernaut here from a stock market perspective there for months and months and months and months. It took that pause and took that break off there for what was that, 6 weeks or almost 8 weeks or so.
Yeah.
And now you're developing with a higher pivot line. It stuck the floor like Mark talked about. Higher pivot low, higher pivot high. A little developing pattern here. I think you can easily put it on a watch list and even potentially trade it. I would probably approach it more position trade style. And I don't know if I just go long delta either, Mark. I mean, it might be a good, kind of cash flow type cover call play, maybe a bull put even. I bet the volatilities are dirt low though. So I don't know how much credit you're going to get from a Clorox, but I like the developing trend here, Frank. If we can get a little bit of clarity out of that, I'd be interested for sure.
So yeah, I could be sold with a little inside candle on Monday, even of calling it a little bull retracement to play. Like Noah said in the chat, pull back to the old breakout point. This will be again your kind of tea, your cup of tea. It's not going to be for everybody, but the reversal characteristics, in my opinion, are certainly there.
I mean, naked put below the 200 at 195. About a 9% return on investment ROI. Costs you about $2,400 to make that trade for 220.
Mark, what price, when you look at something like this, I mean, where does your head instantly go for price? Would it be well below the 200?
No, like it's tough because it's tough. You know, I would probably not sell a naked put. I would probably wait for price to come down to support again and play it off low levels or something. So you know, maybe that's the 200. I'm not. I don't think I want to tie up the margin playing it naked put style.
Mm-hmm.
You know, I'm willing to buy shares coming off a signal, but I'd probably wait for that buy signal to develop.
And I don't want to go down the rabbit hole too much here. My first thought actually was poor boy covered call. Get the leaps, still write calls against it. I think that could, I could map that out in my head as a core position, but I'd have to look at some of the numbers, and earnings are coming up here in about 3 weeks. So might be a better short-term trade just on what you're seeing, Frank. But I'm interested in the development here for sure, because it was such a juggernaut. It would not surprise me if Clorox becomes a standard, because even, I mean, guys, if you think about it, whether or not we have a vaccine or not, I think a lot of businesses are just going to have to sanitize more. They're going to have to use more of this product. I think there's underlying demand here, Mark, don't you?
I think so, right? Like I mean, this is one of those. I think everybody's a little cleaner, cleanlier. I think you know, and I'm fascinated to see their upcoming earnings. But I think there's some sustained growth here in Clorox. I like the poor boy covered calls on the right signal. I would wait for the signal though before instituting that position than doing it just blindly.
Mm-hmm. Love the conversation here, Frankie. Is that any more?
Yeah, I'll save the rest for you fellas this afternoon, but it's tough when it's earnings season. You know, your list of characters. I mean, we've got around 80 S&P companies with earnings next week. I think we're going to have around 100 and over 150 the next week. So we, you know, as swing traders who aren't holding through earnings, just get ready to join my team and be complaining with me. There's always room for you on the earnings go away team. So, you know, the one thing I'll, you know, always say, you know, obviously check those earnings dates, but remember they're coming when you're in your trades, right? So always be on top of that. Do you have time to sit through a retracement? Nothing worse than sitting through a retracement and then having to get out because earnings are here, right?
That's right.
So,
Yep.
you know, you have to take that into your management decisions as well.
And just add that space on the right side of the chart. You know, we've seen coaches do that so many times in tutorials and whatnot. I definitely would do it. If you're a Thinkorswim user, get the space over there so you can see the earnings dates upcoming, and just be aware so you're not caught off guard if and when they do happen. All right, guys, awesome show today. I had a lot of fun, actually, as always. You know, final thoughts, Mark, from you?
I have 55 minutes pro members, the weekend show that I do, go over commodities, and then add the market bell, go over any trade adjustments, ideas. Usually suggestions from members of that segment have been very profitable for me in the 6 months I've been doing that.
Yeah, if you're a pro member, join Mark. That link and that information, it's in the Mind of a Trader show on our website, tackletrading.com. Also in the events page, you can find that. And if you ever have any issues, you can buzz us an email, team@tackletrading.com. We're monitoring that most often, and Mark does a great job with that. Frankie, final thoughts for the team out there? Did
I mention I'm already tired of earnings? So maybe once or twice. It's a good thing I'm not on every day. Or if you would be like, this guy ever say anything other than he hates earnings? No, you know, trade your charts, but you know, earnings do, you know, they cut back your swing trades a lot. And I always tell people, if you want to take a vacation, this is the time to do it, at least if you're a directional swing trader. It opens up new opportunities, new things develop. You know, Netflix, how easy is it to see a scenario where we get a nice break, a continuation of the trend, whether it's for that first trade on it or not, it will open up new opportunities for it. We just have to get through it over the next couple of weeks. So make sure you're staying on top of that.
Yep. And my final thought is you should trade in a way to where when the market bell rings in an hour and 53 minutes, you can enjoy your weekend. and then come back in on a Monday morning. Check your leverage, check your delta, position size, and money management. I've been talking to a lot of new traders lately, and on the phone, on Zoom calls and whatnot. And the number one thing they always tell me that they need some help with as beginners is money management, portfolio design and position sizing. So stay safe, stay responsible, have some fun in markets, and build a plan that you can execute for years and years and years to come. Great job here today this week, Cody. Appreciate you hanging out a little bit longer than you said you could, but I do appreciate it. We will be back on a Monday. If you're not yet a pro member, this is the time to sign up. 15-day trial, get our weekend picks on our option and stock report, get the analysis from our commodity, Forex, and newsletter reports as well. And guys, we'll be back on Monday. We will see you then.
Thanks, everybody. Have a great weekend.